Hello, I'm Tyler Rudek, Chief Investment Officer at Boyum Wealth Architects. In this week's video, we'll talk about leadership changes at the Federal Reserve, which often capture investor attention, especially given the Fed's central role in the economy and markets. We'll walk through three charts that help put the appointment of new Fed Chair Kevin Warsh into perspective and why long-term investors should stay focused on the bigger picture. The first chart keys in on the economy and Fed chairs. The U.S. economy has grown across the tenures of many different Fed chairs, regardless of who appointed them. Each Fed leader has faced unique challenges, from inflation and recessions to financial crises and pandemics. While the Fed influences markets, long-term economic outcomes are driven by broader forces beyond any single policymaker. The next chart looks at Federal Reserve balance sheet. The Fed significantly expanded its balance sheet during crises, which remains elevated today at roughly $6.7 trillion. Kevin Warsh has suggested the Fed should retrace its steps over time as conditions normalize. Shrinking the balance sheet, known as quantitative tightening, can tighten financial conditions and influence borrowing costs. And our last chart looks at GDP, the money supply, and money velocity. The chart shows that economic growth depends not just on the amount of money in the system, but also on how quickly that money is circulating through the economy. While the Fed can influence the money supply through tools like interest rates and its balance sheet, the real-world impact on growth and inflation is indirect and often takes time to materialize. This helps explain why policy outcomes are uncertain. Even when the Fed adjusts course, broader factors like consumer behavior, global events, and energy prices can shape how those policies ultimately affect markets. And that is it for this week. The bottom line is that while changes in Fed leadership can influence markets in the short term, they rarely alter the long-term drivers of investment returns. Staying focused on fundamentals like earnings, productivity, and economic growth, and maintaining a disciplined, diversified approach remains the best way to achieve long-term financial goals. As always, please reach out if you have any questions, and thank you for watching.